Hello guys, good morning. Welcome back to Forex Black Box channel. Today is Sunday, the 22nd of September 2019, and I'm going to analyze pound pairs and possibly extra bit more to do gold as well because I'm trading gold at the moment. So, okay, let's move on to the first pair. It's pound USD. So pound USD, as we last time we spoke about, it was just if you first time to watch my channel, please subscribe and leave a question in the comment box if you need to know more about anything else what I'm trying to tell you here. Um, we talked about this since this area here where I started my videos. I said this area is very critical area, very interesting to investors and so on and so forth. And we moved up from here as a pullback and come back retest is overextended. However, it didn't do new low, which is the key to the technical analysis itself. Price action didn't do new low, then we still in the go up here. So that's the lowest low since Brexit and flash crash. Brexit, flash crash, and we jumped from here really big time, like a lot of pips. Same concept, 2,378 pips up to 143, 143, the highest 143. Anyway, we come back, retest this area with a wave, elite wave, as you can see, uh, like like a band, like stretching and back up, down, but the direction is down. Then when you want to trade it, then you know the direction is coming down to test these lows here, here, and you make a decision regard between these two lows. If it's pullback, then you change your gears to long or short, depends on the situation. So moving on to the analysis, to analyze this week, the coming week. So we have 1 week green, 2 week green, and I said here on the weekend we're gonna have a pullback, which it did indeed. However, it did reach my target as I expected. If we go back to, sorry, daily, here you go. If we go back to daily, hide everything, as you can see, that's wave one, two. Two didn't really break it. I know it broke it. At this low here, we have some positive news of Brexit, and all pound pairs basically drive by Brexit news, if it's positive or negative. So you need to be tuned to the news of UK. You have to have some kind of source of news feed, live news feed at the second to know why the market is moving. If the market is moving up, you need to kind of jump in, then you need to find out why the market is moving that direction and if it's going to continue or it's going to just with a fake news or fake breakout and so on and so forth. So we had this good news and I've been long since all the way up to this last week and I started shorting it and I got a few short worked out, then a long and short. It depends on the lower time frame between 15 and 1 hour. That's when you make a decision. You want to just intraday to cover your longs positions. So as you can see my drawing previously here, this is my hand drawing since my first video I did is going to come to touch this trend line, which is the major trend line, the minor medium trend line. We broke it and the lower trend line is broke here, come back retest and break the medium one. Now we are going for the big one. So it's not going to be straightforward. Don't think Forex is easy or it is simple to trade it, but it's not easy to position yourself. You could position yourself in the wrong time at the wrong price. It's all about the right time and the right price to buy or sell in the market, just like the stock market. But Forex is more dynamic. It moves a lot and it doesn't have a bottom or tops. So don't think that's the bottom, don't think that's the top. It's high probability at the previous low we could see some people or investors or traders or central banks that want to invest on this low price because it's a low price and at the same time it's a good time of Brexit and all stuff regardless pairs or regard bound pairs itself. So as you can see here, really nice rejection of the price down there, and market keep going, 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 but we have uncertainty here, and you can see the indecision going on. The price action can tell you that we are in the same area for a week, 1, 2, 3, 4, 5 days since this area, and apparently we went up and we closed below this high. So what is my view from here? My view from here is, my last time I said that's my high, that's my TB. I did take all my profits out there and I closed, and I did short down inside this area. So my price action telling me, this price action telling me that we're gonna range between this area and this price between 123, possibly 122 and a half, all the way up to 125, 126. However, the main target, that's the destination here to touch this trend line. It depends how much going down and come back retest it. Probably is gonna break and come up to this area. So what I'm gonna do here is to get this level. Just take it from here. That's my next level. This has been achieved, so I'm gonna remove it. So that's my next level. I know it didn't really touch it yet. It did play a little bit. We had some kind of news from Europe and on Thursday, and market spike up, come back down, and continue try to go up again. But the news didn't really. The news been feed away, and I've been short. So we close above the opening of the previous day. We could see another pullback up to these areas on Monday, and we kind of move down a little bit lower to meet this low, to test it. So from here to here, my target has been achieved on this one. So I'm gonna kind of adjust this one now, or just delete it completely. Get a clear picture. Delete all this old information. It probably is all been recorded anyway, so you can go back if you want to. And now is my what I'm looking for now is to long it. So because we have some positive news coming up from UK to get a deal. So my view is to long pound, but not here. That's not the right price. I'm looking for this area here, down here. If I can highlight that for you. Um, this will be my interesting to buy. That's my interest area to buy. My stop loss will be below here. If it keep going lower, I'm just gonna see what's driving the market. Then I will make a decision what to do from there. So that's where we go in. We have a nice big wave. I expect that wave to pull back at least 38% or 50%. So 50% around here, around this area. Let me get my tool. No, sorry guys, that's not the high, but let me just do this. That's the high. So let's see. If we come down here, it's about 30, 30. Let's see what is gonna meet. Let's go down to this about 40. Just let's make this range here. About 47%, 50%. Can come back and test this one. Between 50 and 61% Fibonacci. Then we're looking to go up, kind of like a test this area, 1618. Obviously, market it doesn't really go and do exactly what the technical says. It sometimes extend for that's how the big player playing. No, at the right price, it's gonna be extended another 40, 50 pips. So make sure that's in the back of your mind. Don't leave your stop loss right there, right at the spot, because you're risking to lose your money because you didn't put extra another 50 pips or 30 pips. It depends if you trade on the daily. If you trade on a smaller time frame, obviously you need to be spot the right place to leave your stop loss, not in a typical place, not in the office place like everyone else does. So that's when the bank hunting down these positions is not for hunting your money. No, they hunting the exiting position because they wanna kind of buy at the same time when you're doing this taking off your position. You know what I mean? So if it's any one order going through the wire, they're gonna load more orders through with you at the same time, so it doesn't affect the market in the move. Because when the bank trade 5 million or 10 million dollars or whatever the case is, they don't do it at once. When they do it at once, the market can collapse, and that will be against the rules of trading. They don't do that. They break it down to small bases, because if you put 1 million at the one time, the price will jump, and when they try to fill up the rest of their position, the price is going to be too expensive. So that's why they go back down to the push the market down, down, down to where the stop loss is. Then when the stop loss triggered, they push the rest of the money in, and by the time it go back up, it's going to be the same price as they entered before. That's how they do it. Okay, so that's when the market is going to come down here. They expect it to go higher. So I expect it to come down here. We're talking about from the close of Friday, another 180 pips. I could say just to make it 200 pips down more for the bound to come back to make wave 1, 2. Then wave 3 is going to be higher, 1618. So if I'm want to trade it from here up to this area, about 500 bips, because it's going to extend obviously as usual. And I'm going to leave maybe my stop loss down below this one here, or a little bit lower below this low, or maybe all the way down here. Risk and reward is a 500 bips, 300. Well, risk and reward is not that attractive, but I don't expect the market to come down to this area anymore, because it's been testing it for 1, 2, then 3. That's when the big boys come in here. You can see it. It's very, very clear. You can see that big green um, wick. That's like they call it hammer or shooting star, whatever it is. This inside this day here itself, inside this day itself, it went pushed all the way down. It's tricking everybody that is going to go for a new low. Then it didn't, just back up all the way up and continue up and close. That's mean the bulls have more control than the bears, and that's the balance of the day. Then the next day, some maybe people expect it to go lower or just a fake out, but this is really, guys, this is big. This is a big mover. I mean, like one like this one is a small one, just like the test in the water, then go up, then no, still more to go, because there's a lot of people get tracked here. I want along from here and they take them out. I want along from here, they take them out, and they say, no, I'm not gonna get long anymore. Then the big boys they get, oh, that's our time. Then that we jump in, duck, duck, duck. So you need to know, you need to look on the daily, weekly, and you keep repeating that every single day to get the picture, to get to know what's going on in the market. It's quite important to do that every single day. Even if you still remember the situation down here, we still need to keep doing that so we get this kind of experience. So you need at least 10,000 hours on your screen to be started to understand the market, started getting good. I don't want you to be like 2, 3 months younger in the trading, just you're 3 months old in forex, and you expected to make 1,000 or 100,000 or 5,000, whatever the case is. Don't risk. Um, you should make your risk lower than your average daily. You understand? So if you have, for example, your wealth is £10,000. Don't take all your wealth and put it in there when you are only 2 to 3 months. You need at least 2, 3 years to start to build money, to make money. Like when you want to grow a tree or anything, it is not gonna just, if you give it too much water, it's not gonna grow quickly. Or you're gonna give it too much vitamins, it's not gonna grow quickly. It need to take time, okay, to grow. Take 2 to 3 years to see fruit, and that's the experience of how you grow things. Same thing in Forex. That's experience. You need to spend enough time to test, and back test, and you have a good strategy. You have a plan A, B, C. In case anything go wrong, don't stick around. Just get out. There's always next opportunity, next 5 minutes, or next 10 minutes, or next hour, or next day, or next week, next month. The point of Forex is to survive and try to make constant money every day, or every week, or every month. It depends how you trade. And don't expect Forex will give you money right away. You need to give it some work, time, experience. Then it will give you back. It will be worth it at the end. Otherwise, if you do it quick and gambling, you're not gonna get anything. You're gonna only wasting time. You're stressed out. You're wasting your money. Your wealth is gone, and your level of life will go down with it. So make sure that when you trade only the money you you can afford to lose. You understand? So if you £10,000 wealth, you can take 1,000 out. If that 1,000 go on the fire or gone in forex, you're not gonna break your bank. You're not gonna break your house or your family, your kids' school and stuff like that. You understand? So don't think that's if that forex that simple and easy for everyone to do it at first couple of months. Everyone will be millionaire. Everyone will be easy to make money. No one will be working. No bus drivers, no restaurants, no waitress, no waiters, no, none of those will do any kind of business like that because Forex is easy, and that's the balance of life. So let's stop here because it's getting too much talking about personality and all stuff. It's all about your mindset and how you want to do this in the right way, not to gamble. So that's where we're okay. Let's just go back to analyzing the pound bears. Here we go. So I expect that to come down to this maybe about 50% to come down here. 50% is going to be certain waves. So if you see that the next day is red, the next day is green, maybe the next day is red, this then big green to cover the 3 days over golfing like higher than the previous 3 days. That's mean the Bears running away, the Bulls coming in, they override the last 3 days, then you know that market is turning around like this one, just like this one. 1, 2 cover 1, 2, 3 days. He eats 3 days of pips. When we come up here, we can see that's a very bullish setup going on. So the smart way to do that, you buy it from here, then you leave your stop loss below that candle, and you keep going with it. And certain area here, like I said last week, you get exit and so on and so forth. Now we have a bearish sign or configuration here going on the daily, but it's not going to go continue down until you do some kind of test again, and all up to the news now. So Brexit news can move the market, but is not going to be all positive, positive, positive. There's going to be some negative news in the middle, positive news in the middle. It's going to be a mix. So the only thing you will the only thing you will take from this is to confirm your technical analysis itself, and it did confirm for me that we are in bulling back mode. So we bulling back down here. When you bull back down in this area, you just keep watching for the news, and you keep watching how much is going down fast or medium or low speed. If it's going down hard ground and lower, but is not going fast, that's mean there's something coming. It's only pullback. There's not really a lot of people wanted to buy. Actually, the buyer, maybe they trimmed their positions, and that's why the market is going down to pullback. Anyway, moving on. That's the index. That's a bound index, and we're looking weekly. It'll be easier. All these gaps, as I mentioned before, is not the gap of the market. It's the gap of the provider. It doesn't give me the full data. Only give me a few hours every day. So that's how it looks like. However, I'm looking to the lower point and the highest point only to confirm that's where we're going. As you can see, that's a spike down here, and we expect it to go lower between these highs here and the low. Probably that was low here or a spike here, and that's where we will be testing this area. Then maybe we can continue back up, and the main target is to go back up there and test this trend line, which is going to meet up with the rest of the bound pairs. There is a pound yen. Go back to the daily. Pound yen, same story. A nicely, it doesn't matter if it's red or green. This hammer, what I call it, whatever, is all moving with the pound pairs. So each pair it will communicate with the base and the other side of the pair was the yen. Yen was stronger a little bit, that's why it's green, red a little bit. Then after the yen is getting weaker, then we can see it's start to build up the pips all the way up. At this point, we moved up like 800 pips, I believe. Sorry, just cut this off from the top to the bottom. From the bottom to the top, 850 pips. So we'll give. I just built this one, but I really okay. Let's just like a shadowing thing, you know. So that's the high. I expect it to come down to these lows. So I expect one, two, three. That's a very nice head and shoulder or W patterns. Great W patterns. One, two, three, four. Nice rejection of the price. Like we've been here since this year yet. Just sorry guys. At this highs we were there on July. We meet August, September, as you can see. It didn't take a couple of months to come back to the same price, and it's been just kind of pullback is normal. I'm gonna see another pullback down here. Maybe the next day will be lower. Yen getting stronger. Um, regard Trump and his talk. So let me just delete this. I don't like this confusion. Move this up there. Got a big low here. Let's adjust this. I'm gonna delete all these guys. Quickly analyze this. Get my tool. Let's start a give it 50%. Yen is strong, so I will move it down to here, 60. Probably gonna go down to 61%. Yen is still strong, but pound, if it becomes stronger, will override yen strengths. Yen will start getting weaker, but not immediately. So I expect it to come back up here, 1618. If the market the extra base strike up to come to this level, which is like that's what the market like to do. You like to kind of override the position, the override the come to special area. Like he's not gonna come there and turn around. You need to come kind of spike, and the buyers are position exiting here between the area of interest all the way up to another 50 to 100 bips. That's where they exit their position slowly and cut like 20% each time. The market spike up and push back down and spike up higher and push back down and spike up higher. Then when they exit the full position, not at this at one price, no, not like this one. It was a flash crash. If they come down here and they exit like the 5 million or 10 million, they will push back up like that crazy, and that's going to make the market unbalanced and make a disaster for the rest of their portfolio. So they need to, when the market come closer to this area, they will start to exit their position slowly until they come up here. And if they see a weakness in the market, they kind of switch gears and they push it and they exit at the same times, like flip flop quickly. So I expected the bound yen to come down here, then continue back up here in wave form. Move on, the video getting long. Let's see the yen, as I said, here we go, yen getting stronger. I said that before it's going to come down to this area, which it did come down to this level. Then we'll go come kind of pull back. Maybe in the next day, we'll pull back up here to test these highs. Then we see down move because yen been strong for a while, as you can see. Very nice up. That was pulled back sharply because pound getting stronger than the percentage wise getting off the market, which the switching gears. That's why the yen is getting weaker, which is good for the yen because they like their currency to be low because always risk off they fly to yen and gold and Swiss, but mostly gold and yen the highest. If the risk of the market, stock market, they switch their money to safe haven, which is the yen and the gold. Obviously, gold is more, but yen is more as well. Anyway, moving on. CAD, sorry, pound Aussie. It reached my target here, and I exited already, and I'm looking for to see where we're going from here. I know the Aussie is going to be stronger, but when the yen becomes stronger, Aussie become weaker because yen is opposite of China. China is correlating with Aussie, and Aussie correlating with gold. So that's why Aussie is a little bit indecision here. Gold's getting stronger a little bit, yen getting stronger, and China getting some kind of strength. So we kind of like indecision. So I can expect it to come down here, like the rest of the bound bears. This trade is done. It's complete. Let's just exit this one. I'll clean my chart later on, but I expect that to come pull back to these levels here, 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 to look for a long setup to continue since the bound getting some positive news, and that's the ultimate target for me until we see further movement on the bound pairs. But I expect it to be high. Obviously, it's going to extend 1, 2, maybe to up to 191. Let's see. Let's see. Let's have a look quickly to the weekly where we're standing. Just hide everything away. We can grind in higher, and you can see that we kind of leveled here. We were like kind of like going down, but I expect that to do just a small spike and continue back up. If we make a new high of this high, that's mean we keep going grinding high and low, high and low, high and low. But we're going up to this level. So let's just put this back up here. That level is great. That could be probably 2020, another 6 months to come up here maybe. Uh, if look, if we and I think we are 90% we're gonna have a deal, or we're gonna have another three, or we're gonna have a 3 months extra. All the direction, all the news, every bit of information about Brexit, it's going to the right direction. We going to have a deal, or we're gonna have a time to do uh, the Brexit vote again. Okay, so bear that in mind. If anything goes south, no deal. I don't think we're gonna go through no deal because it's been made it very clear to Europe that if we don't have a deal, we're gonna extend. So that's the two options. To extend it for what reason? We're gonna do general election. General election will be aiming to stay or leave. If we stay, we're gonna have nothing to do now, or we're gonna leave. We're gonna leave with these deals, and this deal is gonna be consequences of this and that. So if you're on the right mind, if you want to go and vote now, I voted last time to stay. I'm gonna vote again to stay if this happen again because it's worth it to stay in Europe. We don't have. I don't wanna buy item from Europe and sell an item in Europe, and I'm gonna kind of like I have to pay tax and traffic and all stuff. I don't want this. I don't want my kids to have problems to travel across Europe, to have a visa every time they go there and have a checks and everything is getting expensive and we're going to lose more than we pay into Europe. So it doesn't make any sense. What makes sense is to stay. It's not going to affect you as a person. It's not going to maybe affecting the government as a government between the Europe and whatever the Europe doing. Yeah, if we're going to make Euro stronger, if we stay with, is good for everybody. I don't know why we want to take a high risk to leave and get everything expensive for maybe 6 months a year. That's if you buying food and renting and all the stuff cost you maybe £5,000 a month for another 6 months until England started getting better, UK getting better, and after leaving Europe, we're gonna spend double, maybe triple of this amount, £15,000 a month to live in UK, and for another 6 months, even 1 month is gonna break here. Is gonna break a lot of people, and that's not acceptable. That's not. If you buy a product for £1, it's gonna cost you £3 instead. Because why? Because we left Europe. Why? Because the tax. Why? Because pound value went down. Why? Why? So it's so high risk. I recommend that for anyone who wanted to go and vote to think about it twice because each vote will count. So guys, let's just move on. Sorry, I'm just keep talking about UK. I know that, but I'm analyzing pound pairs anyway. Pairs anyway. So there you go. We see pullback here to this level. Maybe we can kind of play here a little bit, and we break higher or low. It depends on the news. It depends China, US and China talk, and the stock market. So watch out for this. That's the Aussie index, as you can see. Went all the way up here. started making a shape and break lower because of the China news. It did really speed up down quickly because of what happened in between China and US. Is really like going up nicely. Should pull back up to this area, continue back up, but it didn't just continue down because yen is getting stronger. Moving on. Bound New Zealand is was a beautiful runner as usual. So I been long and I exited somewhere here where I was positioned this level. I got like 1,000 pips of it, up and downs, and we can see here, as you can see, break and continue, and we are in a critical level, and I think New Zealand is going to get stronger. Pound started getting weaker on bullback node, as you can see, big pattern. One, two. I think this is going to go down here 50% at least to this area here, and we could see continuation or pound getting stronger. Then we can see, here we go, let's just say in the middle of the range here, 50, 45, 46, 50%. Let's make it 50% to be simple. I expect to come down to this level, which is 191. We already broke the £2, so it's amazing, yeah. And I expect it to go up to 1618 with it to be extended more further up, but I'll just mark it here to break this high and come back, retest it, and continue up. We're just expecting bullback here. It must be bullback. We can see the daily nice wick up there, and maybe Monday will open a little bit with a weakness of what's going on in Asia. Then we'll go down. We'll have a certain news. I'm going to review the news later on. So I expect that they come back, test these levels between this low and this high is going to be the playground to long or short. Okay, moving on. Pound CAD, the same story, but since the oil terrorist attack on Saudi Arabia, the oil was spiked up, but it didn't really affect CAD very well because as CAD is as weak as you can see, big spike up and consolidation here, and maybe it's going to come down to this level. Let me see what the drawing here. Here you go. It says, like I see my drawing previous one, come back test here, continue back up, back again, break this trend line, consolidate here, go lower, then continue up. That's the ultimate level here. So I expect it to come back up here, come back and play and continue up if the bound have a positive news. As you can see, break this, continue. It's trying to come back up here. That's the daily view, which is a big 2019 itself. Here, that's a starting here. Come back down, come back up, make a wick, come back here. It's gonna do that and continue back up. Head and shoulder shape. Right, let's move on quickly, guys. So this video getting longer now. Pound Swiss, I don't really trade it, but it's moving with a pound. Safe haven as well. Swiss is safe haven, and last week they didn't cut their rate, so that's kind of moving. On Thursday, they didn't cut their rate, come back up, but pound get pulled back, and that's why it went down. Euro pound, I'm long somewhere here in this area. Just getting ready for pound to get weaker, and you can see on Friday we tested that low, extended a little bit, but doesn't matter. It's normally that's the market. It's not going to be by the pip. Come back up here, break the opening of the Thursday, and come back low a little bit. I expect that to be starting the point from here, that blue line, and continue up to this level to retest it. Come back, play wave patterns, then break higher. So if the bound getting weak, weak. Sorry. Euro pound. Euro, it was a bit excited last week. Some news, and we have double bottom here. We break the previous high, come back. I expect it to come down here and continue way up because we have a nice trend line here, and we broke that lower medium, and we'll come to this is the main trend line. Come back down here. As long as we stay above this level on a daily close, not during the day. If we stay above that level, we can very much continue all the way up to this level. This level. So we're talking about 12, 30 probably. You're going to be extended to test this trend line. This trend line on the main, on the bigger time frame, way, way, way down there. So as you can see, break it and boom, come back in, break it. It's going to do the same story, boom. So I could say up to this level, 125 again. 125 is the highest since a few years back, since 2015. The last time we were here was 2014. Come back, retest it, and come back down, and expect it to go up again and possibly break that high. Okay, guys. Um, what's next? That's it. Let's move on to the news. I know that video getting long. I'm going to cut it short now. Here's the news, the high impact in news, Aussie, and you got Europe. Europe on Monday. It's the main driver, so I expect Euro will be strong. Some Aussie news, Australian news, medium, but the highest one on the day on Monday it's the Euro. On Tuesday you got yen, New Zealand as well, Aussie and New Zealand. New Zealand is medium, but the main driver is a yen, sorry, yen and dollar. That's going to drive the day, and Aussie. So all of them are quite very much connected with China trade and all stuff as well. Yen is again on Wednesday. It's quite interesting. Yen's got more news this week, so keep an eye on yen, pound yen, and New Zealand as well. High impact here. I expect that will drive the market high on New Zealand, and that's mean pound New Zealand going to go down, and euro New Zealand is going to go down, and US as well with it. Uh, Euro US here as well. And yen again, wow, yen is really good drives this week with US. So the majority is yen and US news driving the market. Bound it doesn't have much in news. Bound probably is going to be moving with the rest of the bears. There's nothing exciting about the bound until we have some certain news coming up on the wire regarding Brexit. So guys, thanks very much for your time, and I hope that been informative for you and helping you through your trading career. And try to invest in your time properly and wisely. Don't try to take it as gambling and trier. So please subscribe, share, and leave a question comment box so I can reply to you next time. Thanks, guys. Have a great weekend and next week trading. Good luck. Bye.